Welcome friends, welcome to freetaxedu.com, your very own portal for learning taxation and accounting. Today we will start with the income tax session 11, profit and gain from business and profession. So in this session we will learn how to calculate a profit and gains from business and profession. So first of all, we need to see or we have to check out this business meaning of business and profession. That means what is business, what do you mean by business, and what do you mean by a profession. So first term, business. The term business can be defined as doing any activity like a trading, manufacturing and commerce for earning a profit is known as a business. For example, dealers, manufacturing firms, banking, finance companies, etc. These organizations or these firms are doing business. Next one is profession. Profession is depend on individual knowledge, skill and experience. It means the personal skill, personal knowledge and personal experience. If you are earning money using personal skills, then it is called as a profession. So by understanding these two definitions, I hope you understand the difference between the business and profession. Business is a vast activity and profession is subject to or limited to the professional, not professional, individual or personal skills of the person, individual. For example, chartered accountants, cost accountants, company secretary, doctors, engineers, architects, lawyers. These professional, why we are calling them professionals? Because these are uh, doing or earning a money by using their knowledge, skill and experience. In the next session, next slide, here we will check out how we calculate this profit or loss account and receipt and payment account. So why we take this slide earlier than other slides? In the future slides we continuously speak about the profit and loss account and receipt and payment account. So for that purpose you must know what is the profit and loss account and receipt and payment account. So profit and loss account is basically used for business and receipt and payment account is basically used for professional purpose. So here this is the simple format, or we can call it the T format. Here expenses and payment and income and receipts. Expenses are related to the business, income is related to business, payment and receipts are related to professional purpose. Here we can clearly see that a credit side, that is buy gross profit and buy sales, these are the income side, and to side, that means debit side, here to purchase, to salaries, to fuel, to telephone. These are different types of expenses. So if the credit side is higher and the debit side is lower, then the net profit arises. That means the business or a profession is in profit or gain. If debit side is higher, that means the expenses are much more than the income, then the net loss arises here. That means the net loss or loss, in both cases loss is same, but if you are earning income, then in terms of business it is called as a profits. So in the next slide we learn about the computation of income from the business, how we calculate the income from business. Here the simple format is there: net profit as per profit and loss account. Just in the previous slide we saw this term profit and loss account, how that profit or loss arises here. Add expenses, disallowed or inadmissible expenses. This term we will learn brief in the next slides, upcoming slides. So what kind of expenses or which expenses are disallowed, so that those disallowed expenses should be added to the net profit as per the net profit and loss account. If the profit is there, you have to add these expenses to this profit, so your profit will be increased. Less income credited in profit and loss account, different heads of income. That means if you wrongly put the income from other heads, that is salary, if you're earning from salary, if you're earning from house property, those wrong heads must be deducted or deducted from this profits. The next one is less expenses not debited in profit and loss account but allowed as per provisions. That means these expenses are allowed but we have not taken or considered in profit and loss account. So you can check out net profit, add expenses disallowed, less incomes credited in profit and loss account, different heads of income, less expenses which are not debited but actually allowed. So then we come to know the income from business. The final figure is income from business. Next one is computation of income from profession. This one is very shortest calculation. Receipt related to profession, it is on cash basis. That means whatever the cash you receive, not accrual. That means some credit is, if the money is receivable, that will be not counted here, but whatever the already received, it will be counted here. So receipts relating to the profession, whatever he earns in cash, we need to put here, less payment related to profession. That means for earning that money, whatever the expenses he did for that earning that money will be deducted from the total receipts. And here comes the income from profession. Whatever the income from profession is very simple. Income less expenses is equal to net income from profession. So I hope you understand this computation of income from business and computation of income from profession. This is very not simple because this is basic. If you learn in brief or in depth, it is very not a complicated one, but it's really little bit difficult in this. So next one is clear-cut term is allowed expenses. So what do you mean by allowed expenses? As per Income Tax Act, the allowed expenses means these expenses are allowed to deduct from the income of assessee. So first one is which expenses are allowed. We cannot give the list here, so we gave some criteria regarding these expenses. So this criteria must be applicable on these expenses, and if that expense is fitted in this criteria, you can deduct it from your income. The all expenses must be done specifically for the business activity. That means if you are doing a car business, all expenses related to the car you can deduct. If you are doing a restaurant business, all expenses related to the restaurant you can deduct from your income. All expenses must be related to the previous year or financial year. So we calculate this income from business or income from profession for particular period, that is 1st March to 31st March next year, and we assess that income in the next year. So while doing this assessment, you must understand that those expenses, whatever you are considering, should be related or must be related to the previous year or financial year, not for previous to previous year, or not for current year or for future years. Next one is expenses should not be of personal nature. That means if assessee using the car for personal purpose, that kind of expenses he cannot deduct from the business. If assessee is paying light bill for his personal or home, then those kind of expenses you cannot deduct from the income. Should not be spent on any illegal activities such as bribe or smuggling. If you're claiming a exemption deduction of expenses and that expenses are related to the illegal activities, that means bribe. If you are giving some bribe to the uh, government officer or to anybody else, if you are giving money to particular group of persons which are not related to the business, then that amount is not allowed expenses. The expenses should not be in the nature of capital nature, in the nature of capital. I think there might be some uh, editing mistake, but it should not be a capital nature, because whatever the capital expenditure is there, it should be shown in balance sheet, not in profit and loss account. So uh, it should not be of capital nature. Depreciation on such capital is allowed as expenses only on assets used for business. Suppose a company car is there, and if owner is using for his personal use or personal purpose, then the depreciation of such car cannot be allowed as expenses of business. But if a car is used for company purpose, then the company or firm or individual can use that depreciation as expenditure from the income of the business. All business expenses related to the building, furniture, plant and machinery, business related vehicles are allowed expenses. It is just similar to first. All expenses must be done specifically for business. So whatever the, even though the, if you are doing a repairing to the building, if it is not major repairing, you can claim it as expenses. If you are doing furniture, some expenses on furniture, you can claim it as a expenses for business. Plant and machinery repairing, business related vehicles, if you are doing some expense on these assets, then these are allowed expenses. But these assets should be related to the business only. It should not be related to personal use of the owner. So next one is disallowed expenses. Cash expenses of rupees 20,000 per day per person is disallowed. Cash expenses should be less than 20,000. That means if you are paying a cash to the person against expenses, and if the cash amount is much more than 20,000 rupees, then that expense is disallowed. Disallowed means it is added back to the income. If your income is 20,000, suppose, sorry, 5 lakh rupees, and if you pay 21,000 rupees to a person in a single day, then that expense is disallowed and it will be added to the income. That means if your income is 5 lakhs, then after this income will be 5 lakh 20,000 rupees, 21,000 rupees. So disallowed expenses should be added to the income. If a tax on perquisite of employee is paid by a company, then the tax amount should not be claimed as expense. If a company paid tax on perquisite of employee on your own, so the company cannot claim that as expenses, because it is not assumed, it's a clear guideline that assessee's employee has to pay the income tax on the perquisites. So company cannot claim this as expenses. Payment made for services to the foreign country without deduction of TDS, tax deducted source. So if you are paying a payment to the foreign country or foreign party without deduction of TDS, for services only, not for trading, this condition is only for services, then that kind of expenditure is not allowed. That is disallowed expenses. and these expenses should be added to the income. Expenses those are not related to the business and profession. So it is opposite to the previous allowed expenses. First point, expenses those are not related to the business, you cannot claim it as expense. Those are disallowed expenses. Income tax, security transaction tax paid by the company, those are the disallowed expenses. Taxes utilized as a statewide credit on inputs and input services. So whatever the taxes paid by the company on input and input services, this term belong to the central excise and service tax or statewide credit. So if it is used as a statewide credit, then this tax amount cannot be claimed as expenses. So it is a disallowed expenses. So I hope you understand what is the concept behind allowed and disallowed. Allowed expenditures you can deduct from your income, but disallowed expenses should be added back to your income. That's it from this session. I hope you understand what is business, what is profession, how to calculate the business net profit from the business, income from business, and how to calculate income from profession. Next one is what are the allowed expenses and what are the disallowed expenses. So that's it from freetaxedu.com. We'll meet in the next session. Bye bye.